Today is one of those days when it comes to the stock market. Sectors like semiconductors and media are in the red. My SPMO position is down about $560. If you're newer to investing, days like today can be frustrating, especially if your position is newer. You might open up your investing app and feel like, did I make a mistake? Is investing for me? Today I'm going to share with you why I'm okay, why I'm still smiling. This isn't the first red day that I've been through, and it won't be the last. And it's days like this that have helped me to build up these positions, like this one, nearly $30,000 into SPMO. I'm currently just 1.5 shares away from my next goal of hitting 200 shares. So yes, as I said, the portfolio is down about 560, but it's up about $6,000, a 25% gain. And I'm not looking at that $560 as a loss. It's unrealized. My portfolio is just down on the day. And as my portfolio grows, those dollar swings are going to get bigger also. If my total portfolio value was $500, that 2% drop would not be as substantial, but you're going to see it more as you hit tens of thousands, hundreds of thousands. So be ready for that. It's not a loss. It's just on paper. I'm not selling today. I'm still in the building phase. So taking a look at those semiconductor companies, many of which are in the top 10 of SPMO. They're all in the red. Micron, Nvidia, Broadcom, AMD. But that's just on the day. We have to think long term. We have to always zoom out. The reason I say confident when it comes to my investment into SPMO is because of the structure, the methodology. SPMO, Invesco S&P 500 Momentum ETF, doesn't just buy everything. It filters for momentum. It asks the market who is leading right now, and then has us on track to double down into those big names like Nvidia, Micron, and Broadcom. So every March and September, it reevaluates. I love this because it takes the guesswork out of investing and keeps me on track through rebalancing and having those best performing investments in my portfolio. They're following the big money for us. This investment has an expense ratio of 0.13%. Now, I want you to be aware that this investment is more volatile than a basic S&P 500 fund because of the weighting and concentration. When certain sectors have that pullback, you're going to feel it. This is why a VOO that tracks the S&P 500 is a foundational investment when it comes to my portfolio, while SPMO, a momentum ETF, is something that I've added on top for additional growth. Taking a look at how these two investments are moving on the day, VOO is down just 0.34%, while SPMO is currently down almost 3%. But zooming out, over the last year, SPMO is up 29%, while the S&P is up about 20%. And zooming out even further, over the last 5 years, SPMO is up about 145%, while the S&P is up about 74%. So it's definitely winning long term, even with the higher volatility that comes along with it. Every major winner that's in my portfolio, Google, Amazon, even Apple, have gone through a rough period. Early on to investing into them, I even went through some red periods like I'm having right now with Microsoft when it comes to my portfolio. But it's part of building wealth. We can't avoid these red days. The ones that keep buying through times like this are the ones on track to build wealth. A temporary dip is not going to change my investing plan. When it comes to investing in ETFs, I'm not betting on one company. Building when it comes to SPMO. My goal isn't to time the market perfectly, but I am ready to take advantage of red days to work towards my goals. Years from now, I won't remember this $560 dip. I'm just focused on staying disciplined and keeping on track with my long-term goals to build up certain positions. All your eggs in one basket. Be diversified. Put the work into knowing what you're incorporating into your portfolio so that you can hold long-term without fear and stress. Every investment and sector moves differently. While my semiconductor investments are struggling today, many of those big names in SPMO, my Apple stock hit another all-time high. It's currently $330.40, leaving me with a gain so far today of $256. And overall, I'm up over 10,000. This is what being a buy and hold investor looks like. The market is always moving, whether you're looking at a daily time frame, over many years, or even decades. We have to be ready for the moves of the market and put the work in before deciding what is an investment when it comes to your portfolio. Drop me some comments and let me know what investments you're working on building up. Share those dollar size goals or share size goals that you're working on. How do you handle the red days? Do you have your alerts at those limit orders placed? Most people are looking for a sale when it comes to everything except for the stock market. I look at days like today as an opportunity. The first 3 months that we had of 2026 as an opportunity, because when you're invested into the right things, the recovery is going to come after. If you found this video helpful, make sure to subscribe, like, hit that notification bell, hype this video, and come back for more updates as well as stock market news. I am Lisa J. Stocks. Thanks for watching. Okay, bye.